maybe 16 hours or more, the market is been struggling to go higher. So we have to be extra careful around this level. But the overall structure here is we are no longer on this downtrend because the market got out. So I'm expecting to see a nice push to the upside. Yes, anything is possible. The market might reverse here and there. We saw the stock markets, they were aggressively reversing. Maybe anything might happen. But at the moment, I still believe that we might have a nice bullish move. You can see we had this higher level there. I think it's around 19,900. I think that is going to be the highest level that we reached before. And maybe the market from this area, we'll see whether it will break out or maybe the market will reverse. I hope that makes sense. I hope that makes sense. Let me check the last one. May you please check Nasdaq any possible entries on the uptrend? Yeah, I think that after this consolidation structure there, I think a buy, it can be a very nice thing. AUD, NZD. I think GBB CAD, I did that. DXY, I did that. Nasdaq, I did that. Gold, I did that. So let me check AUD, NZD. AUD, NZD. Then we can call it a day. And AUD, NZD. I don't think I have that. Let me add a AUD. We need FOREX. Okay, I did not really have that. Let me remove my Apple there. AUD, NZD. Let's see what's really happening. So on this one here, I'll have to check what's really like long time ago. So let's see this on a daily time frame so that I can easily identify the trend. What's really happening with the trend? Slowly, you can see that the market is actually going to the upside. So this is actually a continuation of this nice uptrend structure. So it seems like the market did touch this support area. That is something that happened. We can just call that a breakout, fake breakout, obviously. And now we can say we are on this nice, we are continuing with the previous trend. So now let's zoom a little bit closer so that we can see what's really happening. Already we saw the trend, where the trend is going. So let's see. You can redraw this if maybe you want, but I think we already know that we are on a very nice trend. I don't know if I draw it here, it will make sense. I don't think it makes sense. Remember that. So I can say the market moved a little bit far from our support area. But if you're checking this like almost every day, I think you can place your notifications once the market is going even lower. So I will try to zoom and see what's really happening. Okay, I think here we were going to have entry after we have this breakout. So the market went up. I think this area is also giving us resistant vibes. You see that the market has been struggling to break this level. So I think above this area, it can also be a good entry for whoever who is trading this pair, because the market, I think, yeah, we can still have a very nice buy, or maybe just wait for the market to create something. If maybe you're waiting for some other confirmations, then once the market breaks out of that, you can actually look for a buy, or maybe the market will continue going down. I don't think that will happen. I think the market will end up creating something like this going further. So I think for today, that is enough, guys. I will see you next week. So yeah, I think for now it's enough. Thank you very much.
If you're someone watching the show
Even
right
though
now
I
and
wasn't
you're
able
outside
to.
of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
What's happening, everybody? Happy Friday. Welcome back to a little segment here for A1 Trading. Just keep an eye on things. Really interesting. Check this out. Currency strength chart does not look like we should have a melt up today in the markets. This is pure risk off trading when you've got the Japanese yen on top and Swiss on top, everything else down below the baseline. We've got some risk off flows in the currency market. And here we are looking at the S&P's up 0.45%, the Nasdaq's up 0.3%, the Dow's up 0.58%, Russell's up 1 point what? Are you kidding me, man? The Russell's up 1.95%. Good Lord. Talk about a little outperformance and small caps getting some love. Anyway, I just think that's a crazy difference to see that this is not representing risk on flows, and yet the market's like, yeah, whatever, dude. We're just gonna keep ripping to the upside. So I do want to see, the Japanese yen futures market. This is 6J right here, up to new highs. Boy, I'm glad I didn't call a bear call spread there because this Japanese yen is a piece of work. The Nikkei, barely budging, but turning slightly south today. I mentioned this in a video yesterday. I published a video on Twitter and on YouTube. I thought that it's possible that we'd have something like this in the Japanese yen. Well, that looks like it's a little bit foiled. So I don't know. I mean, Japanese yen continues to do its thing. The Nikkei may be a little bit easier. Maybe it's something like this. We have a high, low, lower high, lower low. And then in this area with a potential higher low, I'll probably get some Nikkei exposure. I don't mind like looking at Nikkei. I mean, 12 months out after a big drop of 27%, probability is we're going to be higher. So anyway, I think it's pretty interesting that currencies do all sorts of wild stuff. And go to the dollar index. Dollar index is back down to these lows again. Still not necessarily breaking, but you come into FOMC next week. It's not a surprise, right? Think about this. What's next week on Wednesday? FOMC. What's FOMC going to influence? Everything, the entire market. So yes, it's going to have a big impact on the dollar. If this is, dollar noise, and then next week the Fed breaks it loose, or the Fed breaks it loose, we're looking to see if the market will actually give us some direction on the dollar. Okay, so that is something I'm absolutely watching next week for some currency trades. If the dollar breaks, retest goes, there's open space, and we can see a weaker dollar as the market's possibly still going to price in additional rate cuts, because this is where it all kind of started. And we'll see if the Fed is, going to be somewhat dovish and more dovish, and maybe the market's like, yeah, man, these guys are seriously cutting rates, and once they start, they can't stop. So if the dollar gets weaker, then there's some good flows potential in the FX market. But certainly watch this area right in here and right in here. Does it mean I want to trade the dollar right now and have this exposure prior to the Fed? No, not at all. I'm going to wait and see how this plays out, because to me, this is noise. It's right on the brink of breaking support, which there's clearly some opportunity there, but it's also on the brink of holding support, which has gone back to early 2023. And this could be a rip back in the midpoint or an indecisive range that gives traders a chance to, maybe get long the dollar and see. And again, risk off flows, dollar gets stronger on risk off flows, risk on flows, dollar gets weaker, and we see the stock market continue its melt up. Okay. All right, so that's dollar. If we go to the markets right now, the markets have had a pretty darn good week. They've clawed back in a big way. Here's the S&P. We have essentially taken out the sell-off from Tuesday last week during that post-Labor Day move. What a crazy day, right? Like Wednesday was nuts. Thursday, Friday was just pure melt up, and we are sitting here, right at these. I mean, we're so freaking close to these all-time highs that you got to give the market credit. The market just wants to go up. Look, I am a bull based on this momentum. This was a pretty broad market bull push. So I am a bull until price proves otherwise. Okay. So that means this: If we all of a sudden turn aggressive with the down move, okay, fine. Then we're kind of right back at these highs and stalling at the highs. But if this thing just, rips to the upside and then pauses and rips to the upside, I hate to say it, but nothing wants to stop this market yet. So I'm just going to be monitoring that closely. So SPY is above the Labor Day sell-off. If you go to the Qs, it is now above the Labor Day sell-off. You go to the Dow, it is right at the Labor Day sell-off. This is Tuesday. So the Dow is up above that, big rip on the Dow. And then the Russell is gaining into that. So there's still a little bit more to go from that Tuesday of last week's sell-off, but the Russell is up a big chunk today. That's pretty impressive compared to the others, right? I mean, it's 2% on the upside. The Dow's actually outperforming the Nasdaq, and the Dow's actually outperforming the S&P. So we're getting, I think that's a bit of the Russell especially. That is a bit of a broadening move. So yesterday, for example, I think about 70% of stocks advanced. I think 11 sectors closed green, so we had pretty much a broad market rip yesterday, which is fine. But I think it's, like I said, interesting that we're getting some currency movement today. That maybe this is noise. If the markets say, okay, the Swiss starts coming down here and the Japanese yen comes down here, then it looked like risk off, but it starts to come back in and settle at baseline. Who knows? So we shall see. But right now, I am bullish until proven otherwise. And coming into next week, I'm just watching. I'm just watching to see if it's up into open space. Okay, it's breaking all-time highs again, and that's going to get everyone excited. Okay, but we still have more employment news over the next month. I mean, we have a rate decision next week. The Fed is likely cutting rates. That's essentially. So let's go to, what am I saying here? CME Watch Tool. Okay, probability is, oh my gosh, you freaking CME Watch Tool. I think Frank said this morning. Let me see. Did you put this in the chat this morning? I think you did. This is complete nonsense. Oh my gosh, this tool is like, I don't know. This tool is so sensitive. It was 87% yesterday. 87% that the Fed's gets to 25 basis points. Look at what the market's thinking now. It's 50-50. Right? So stupid. So clearly sensitive. There's a reason this thing jockeys around right before FOMC. And so, look, we might go into FOMC next week with a complete 50-50. Nobody knows what the Fed's going to do. So all that means is I would expect some fireworks around whatever the Fed does next week. And I know we're going to be live here for A1 Trading streaming. It's going to be an important day to watch and see what price gives us, because it may not be the day of FOMC, but it's the aftermath. Right? Like, what does the Fed do? What does the Fed create? What kind of price action is after? What kind of week do we have to finish on Thursday, Friday? Right? So it's wild though. I mean, I was like, yeah, it's 80+%. Like, it's pretty much a baked in 25 basis points. Not anymore. This is now a complete toss up. Crazy. All right. Let me check on something really quickly here. Just watching a position on my end. I've got a 315 trying to get down to, all right, I'll watch that. See if price can just come back to my center price around 5,600. Let's go to some other charts here. So U.S. indexes, I'm looking at the futures market. Futures are leaning slightly higher. We just turned down on the MNQ. This is a Heikin-Ashi candle, so I'm just going to be watching this to see, could I take a sell trade stop above and see if this wants to go down. Let me see here. I might see if I get a nice strong close below this, I might take an MNQ sell trade and see if this wants to come a little bit back down to where we started. We also had a lot of noise during the U of M sentiment report, which I also thought was interesting. Okay, sentiment report. Did anybody see this in the U of M? There was a lot of noise right around the 10 o'clock candle. The one print that I thought the market was like, hey, wait a minute. The U of M basically committee, they also projected inflation expectations, and this printed 2.7. And everybody remembers Wednesday this week where the CPI came out 2.5. So a bit different. I mean, I'm not saying one's better than the other, but let's see the trend from 2.7. Okay. So we had 2.9 and we actually printed 2.9, right? Our last CPI print year over year is 2.9. This week we printed 2.5, and here we are, U of M inflation expectations 2.7. So it's, and again, would I trust University of Michigan? I don't want to get in this debate of like, no, I trust Ohio State. I'm not saying that. I'm just saying that this U of M stuff has been around for a long time, and they might have a little bit better calculation method than what the CPI is when they're like, no, we do core CPI and we watch PCE. And anyway, but maybe the market's just thinking, okay, inflation might be a little bit stickier. We'll see. But it's all about the Fed next week, and this is a crazy shift from literally yesterday to today. This was up to 81 to 83 to 85% this week. 87% I saw it last night. Now it's at 53. So go figure. Back into the SPY here, SPX. I'm looking for this thing to come back in towards 5,600. That should be my center price. My trade now should be looking better and better. Should be hitting some profit here in just a moment. This is good. When this gets filled. Okay, overall, let me put this in. Daily profit play update. That was perfect. Okay. SPX 913 expiration, 3.75 credit, 3.15 debit, filled, 15%, take profit, hit. There we go. Okay, so I just updated my Telegram there. Out of the trade with my, wait, what the hell just filled? Oh, there it is. Right? No? Something just filled. What just happened? That's working. Oops, hang on. I guess I'm not out of the trade yet. Come on, you son of a gun. What just filled? Not filled. Gosh darn it. I need to find out like something just executed. All symbols. Oh, it was that. Okay, it was that trade. Yeah, it's out. All right. I was like, why am I scrambling? So my trade this morning was a 375 credit, just closed out from a profit target 315. Thank you very much, Miss Lippy. Off we go. All right. So that's what filled. Good stuff. Also lower the cost base on Pfizer. That's going to save me an extra $440. And, having a nice little P&L day, which is totally fine. All right, let's get back to the charts. Gary, love it, man. 315. Fantastic. Fantastic. Good stuff. We are out for the $65 there. There we go. Hang on one second. There we go. Okay. I should be all good now. All right, let's get back to the charts. We're right at the highs on the S&P. The Nasdaq obviously has a little bit more work, but I've said this for the week. Look as good as it looked from that Wednesday rip and that crazy day we saw Wednesday. You notice how the market is still not at all-time highs. You notice how we're still sitting here with a possible ceiling that the market might not be able to break, right? And this is all going to be dependent on the Fed next week. So let's talk hypothetical here. Let's talk some scenarios. And let me get a little poll for everyone watching today. Would anybody be surprised if the market next week, it sits right at this level, to see the market drift up and hit the Fed, maybe during Fed day, it like melts up. And then the day after we frickin' drop. Would anybody be surprised to do that at all-time high resistance? I don't think anybody be surprised. It's just good technicals, right? Market's overstretched, market's overbought. Why are we justifying all-time highs? Blah, blah, blah. Who knows? But the price could stall there. And that's what I'm looking for. Okay. I am still bullish based on this rip to the upside. I'm still bullish until proven, otherwise. But if we see a big fat sell-off candle like we saw Tuesday last week, then yeah, this puts a little bit of a damper on, okay, if we're here, then the bulls would have to break these highs. And I'm going to let price prove it. So I'm just being patient. I don't want to rush into anything. I've got some hedges to the downside that are out of the money. I canceled some of my, my butterfly spreads just because I'm not trying to call a top here, you know. There you go. Alan says staying in cash. Perfect. You're taking a page out of Warren Buffett, or taking a page out of Warren Buffett's playbook right now. Going to cash, baby. And look, there's a time and a place for it, right? Like right now, who knows? We're at all-time highs. Everyone's worried about the potential recession. We're coming out of this inverted yield curve. In fact, let me see if that's still the case. And then I did see some questions like, "Hey, can you talk about this? NVIDIA, can you talk about this?" Yep, let's talk about it. So we're still, based on what I see here for the rates, the 10 and the 2 year. So we are disinverted. There's about 6 or 7 basis points here disinverted. The 10, the 2, we've come out of that longest inverted yield curve in history. The disinversion is not necessarily great for stocks historically. If I zoom in, what I'm looking for, and this also may happen after the Fed, okay? If we see a steepening, I think that is the best thing for the market to continue to go higher. Okay. And I say that because there is a really good correlation between the inverted yield curve and the disinverted yield curve with labor. Okay. When we have been seeing the trends, and you can see this in the A1 Edge Finder, when you can see that employment data has been showing jobs are slowing, JOLTS jobs openings are slowing, wages are flat, and you look at what are the other metrics? Unemployment rate has been creeping higher, right? Jobless claims have been steady, okay? But numbers overall have not been great. So my point is, when we went down into the inverted yield curve, that was actually employment numbers were getting better. That was a tighter labor market. As the employment numbers have gotten worse, this is where we're coming out and showing that disinversion. Okay, so this is something to watch. What I'm saying, I see you, Frank. What's up, dude? If we go steeper and we get back to this this inverted area, that's probably a good thing for the stocks to have legs to the upside. In addition to the dollar getting weaker, to me, if I'm putting puzzles together and I'm saying these are the major catalysts that I'm watching for, I think that employment has to get better, and we're going to see if this gets better, and this would actually be a steeper yield curve, and we go back to inverted territory. If that happens, that does help fuel the stock market as well as a weaker dollar. Otherwise, if this continues to drift higher, that's not a good thing. Historically, coming out of that inverted yield curve doesn't bode well for stocks. So between the dollar and this 10 and 2 yield curve, employment data and inflation data and what the Fed's going to do next week, all that's going to be on the table for us to navigate. So, Frank, I saw your post this morning, dude. That was pretty incredible. What do you make of this 50-50 now?
Yeah, I'm not really sure. My question in that Discord was why cut 50, and I was talking to Nick about it too. Maybe they're behind. I don't know. Maybe the Fed is realizing that they actually do need to cut more aggressively. I mean, these are changing very drastically, so in the next few weeks, this could come down substantially, and we can see a majority 25 basis point cut probability. But to see it this morning, it went all the way up to 49 and 51, and then it kind of settled around here.
Okay.
This is 45 and 55 on my screen. But the numbers are constantly changing. So let me share my screen now so you can see what I'm looking at. Okay. So because they're just all over the place, it's hard to tell. But the fact that it's close to even is pretty concerning, because I don't think a 50-point cut is a bullish sign. I think cutting because you have the luxury to do so is dovish. So cutting by 25 basis points is a good thing, in my opinion. But now that labor has cooled down as hard as it has, maybe the Fed is realizing that they really do need to step up and they need to come in and save the labor market. That's not a good sign, in my opinion. And now we're at near all-time highs on the S&P. I'm not exactly confident in this. So if we do test the highs, we go back up to 56, 70-ish, or a little lower, whatever. Mm-hmm. I may look to, sell some credit spreads above price, stay out of the way. But I think there's limited upside here. But
I do too. I mean, look, I think price is going to be okay. So I was at the gym yesterday for about 2.5 hours and listened to an interesting podcast. This guy,
why are you at the gym for 2.5 hours?
Because that's what I do, man. No, it's because I need to freaking de-stress every now and then. I need to cleanse, and it's if I just sit on my butt all day, it's like I could be a sedentary trader and just get be like the South Park guys when they're playing World of Warcraft and just sit there and have somebody bring a bedpan to me. So I need to get to the gym.
What do you do in that amount of time? Like, I feel like I would run out of things to do if I was focusing on one thing,
Yeah. So Stairmaster for an hour, rowing for 30 minutes, lifting for another probably hour. Yep.
An hour, Stairmaster.
Yep. But this is what I do. I listen to podcasts. I listen to like financial podcasts at 1.5 speed, and I just consume as much content as I can in the time. And so the reason I stayed yesterday was one was almost done. I'm like, I'll do a little bit more. And I just lingered for another 15, 20 minutes. But yeah, that's usually what it does. So yeah, it's like once or twice a week. I try to just, enjoy the time. So make it productive, but also it's sad because I wish I just listened to music, but I'm just like, yeah, let's listen to stuff that hopefully gives me a better opinion. But anyway, look, man, this is a wild shift, and I think that are we on the same page here? I think that if the Fed cuts by 50 basis points next week, that shouldn't trigger anything good to the market, because that is literally the Fed openly admitting that they're wrong. That's what 50 basis points is to me. Even though they could justify it, and Powell could come out and say, well, here's why, but it's like there's no employment data to justify cuts. But I suppose a 50 basis points cut could maybe help real estate. The 50 basis points cut can maybe help the consumer. But a 50 basis points cut is certainly showing that the Fed miscalculated when the timing was appropriate. And obviously the market is crazy sensitive. The market is like a toddler. It's having a temper tantrum. And next week, I don't know what price is going to do. Nobody does. We're sitting here near all-time highs. Could it hit the all-time highs? Sure. And I will pick my battles and look, if we break the all-time highs, if we break and we stay, why not? Right? Destination 600, here we go on the SPY. But if we break and we fake, then it's probably settling back in, and it'll be more September volatility, whatever that looks like. I don't know. So it's not a hard trade. It's just position for it, right? I mean, I'm not getting really directional right now. I'm not really trading anything right now. I'll kind of wait and see. In fact, next week, Frank, maybe one of my classic like indecision trades, right? Where I'll buy a call and then I'll sell a call. I'll buy a put and then I'll sell a put, and I'll let volatility do its thing. So actually, you want to look at that right now? I kind of want to price it in because IV's not super high right now.
Talking about a strangle?
It'd be a long strangle. Well, not technically. No, it'd be like a long fly, a long butterfly, because I'm putting 4 legs in. So a long strangle would just be 2 legs, but I'm going to go 4 because I want to sell against it. So let's take a look at that. Let's go SPY next week. And if we went out to next week is going to be the 20th for expiration. Now, I don't necessarily need to take the trade today, but I want to price it out and see. It's going to be more expensive because I'm doing a long option. But if we're trading at 562 and I buy the 563 and I buy the 561, if we have some volatility next week, part of me wants to favor like a 10 to 15 point move on the downside and then go like 10 points to the upside. So I'm gonna cut off. Like where's 570? That's like open territory here. 565. I mean, I'll go 570. I'll tighten it up to the upside. So I'm going to sell for 850. I don't love this, but I'm going to sell. That's a $7 position that doesn't really cover the cost basis, so that doesn't help. But if I do a 551, I don't like this at all. Well, wait, I need to change this to a sell.
You think a 50 basis point cut? Not saying that it will happen, but the expectation of one, do you think that is probably going to lead sentiment to bullishness in the short term? And once it actually happens, if it happens, it's no longer a sort of a bullish signal?
That's a great point, because it totally could be, right? We could completely have this movie, buy the rumor, sell the news, right? I mean, how many months have we been waiting to see like, okay, the Fed is finally going to cut? I mean, they've gotten away with so much free mileage of just talking this year that now it's finally here. And if this is as good as it gets, I also want to check in. I've got this one thing, PE, price to peak earnings. Let me check this. Okay. So look at this. Now, we're not at the same highs we saw back in April of 2021. Where, it wasn't until like late April when the Fed started kind of their deleveraging and we had that bear market in 2022. We're not at the all-time highs here that we saw back in 1999, 2000. But that is certainly something to watch. The average for the price to peak earnings tool is around 12.6, and we're trading right now around 27. And also, if we go to the, is it price to sales? Yep, price to sales. So I put both these in as favorites to like try to spot a toppy market. Okay, price to sales, we're pretty darn high, man. Like again, it's not at the same valuations we saw in late 2021, but what happened here November, December of 2021, Frank? What happened in the market shortly after that?
In November of 2021?
Yep. Like November to January 2021, what happened?
I remember 2022 was a bearish market. So
that was the top, dude. November, December, January of 2021 to 2022 was the top. The tech market topped out in November. The S&P topped out in January, and we had a bear market right there. So that window was the top. And this price to sales history tool, we are creeping up on those levels again. Now, again, I don't want to sit here and be like, it's toppy, but we're way off of those levels. Like when this market had a top in 2021, it was way the heck back here, dude. So, I mean, to have a top in 2021 and drop 30%, we're above those highs. So, it doesn't really change anything. No, it just means like this created a top because the market was frothy and the market was overpriced, and so the market corrected. The same type of thing could happen where, do we like blow this top off here and then have a nasty trade later? Like, could that happen? I could see that happening, man. Like, this is why I can't commit to like, I've got to be bearish. I can't. I think what I'm probably going to do and just have to suck it up and do is I'm going to have to put on hedges to just protect my butt if something stupid happens to the downside. But if this market wants to keep doing what it always does over all of the wars and inflations and ups and downs and the recessions and expansions and whatever we have, if this market just wants to keep finding ways to go higher, it's going to go higher. And I listened to an interesting tidbit yesterday that if you compare the stock market with the valuation of gold and gold spot prices, the stock market's actually returned very little net income over the years if you baseline it with gold. But if you take the stock market and you baseline it against the dollar that has been debasing, and weakening, that's how the stock market and these assets continue to go higher and higher and higher. So in a way, it's just, I think it's very misleading, which I thought that's interesting. I can dive deeper into that. But anyway, look, we're at the all-time highs. We're pretty much there. The Nasdaq's not quite there. The Dow's not quite there, but they're right there at these all-time highs. And so can the market justify more? And I think that if it's just the Fed, I don't know if it's enough to then spur the market higher, because what are we missing right now? We're missing a good employment window because the employment data has been crap since like June and July, and now the market's starting to take notice and the SOM rule's been in effect. But if we go into earnings season, we're not that far away from kicking into a new earnings season. Once we start October, we're going to have financials, we're going to have the Mag 7, we're going to have the broad market. We'll have October be a very active earnings month, and then it's back to the same thing. What's price to sales? What's the overall market? What's price to peak sales? And if things are still delivering, if Mag 7 still delivers, if NVIDIA still delivers, if Apple still delivers, if the broad market has positive earnings, consensus is okay. The one thing that's been sucky has been forward guidance. Everyone's been like a little choppy on like forward guidance. Consumers cutting back, people have been pinched. So I don't think the Fed can do it all by itself. I don't think the Fed can just get there.
I think they'll find a way to justify higher levels, but that doesn't make it bullish. I bought oil, by the way. I bought Occidental Petroleum.
Oxy, okay, good. I think I bought some Oxy myself. Even though I look at the chart and I wish I didn't. No, I'm kidding.
I know it's just been beat up.
I know. Let me see here. I think I have some trades in it.
Partly a trade just because of Hurricane Francine.
Yep. So I bought some Oxy. 500 shares.
Sheesh.
That's not what I wanted to do. 500 shares at $51. Bro, that is not what I wanted to do. What the fudge? 500, 400, 500. Somebody got to sign some shares. This guy. I had a 60 by 50. You freaking turd. So I got to sign on a 60 by 5750. Yeah. So, I mean, I have a long put. So what I can do right now, this is a good example of taking some shares. It's funny how, like, I didn't even notice that I had this because my buying power has been pretty high the whole time. I do have partial assignments on these other shares. This is a little silly. So let me go into this account. This might be something maintenance wise that I do offline, but basically what I'm going to do is I'm going to calculate my break even, and I have until October. So I suppose what I can do is let me put a chart alarm here at $60 because that's where I was assigned. Oh my gosh, that is that's way higher than current price. $60 is way up there. We're coming back into this low that we see back in 2022. It's been beat up a lot.
On that.
What's that?
Go to the 1 week.
1 week.
If you have your moving averages set, I got on my screen.
Okay.
It bounced right off its 200-day or 200-week moving average. This is also like a common level.
Well, this is a good structure area. I mean, go to that big candle in Feb 2022. Yeah, that area, if it holds, I think that's solid. But I would even open that box up more to that full candle. We could fall. I mean, we could fall into $43. And so I think the best thing for me to do, the best thing for me to do would be to have the long put hold and still have it be my hedge. I have until October 18th on this position. So if price is going to fall further, what it allows me to do, so here's an example. This is just a good example of what credit spreads can help with. So I did a $60 sell put and a $57.50 buy put, and I believe I probably captured $1.25 or so. I was filled on Oxy. Sounds like I'm a drug person. Filled at $1.36. Okay, so I was filled for $1.36 credit. 1.36 credit. All right. So I was assigned at 60, but with the $1.36, that means that my assignment right now is going to be a break even of 58.64. That's my break even. Now I also have a 57.50 long put, and that's going to be my hedge. And that's still open right now. So if I were to say, Frank, I think this is already, if I were to say this is a low and I want to just go ahead and cash in my long put, what I could do right now in my long put is 57.50 minus 51.78. That's $5.72. Okay. So I could actually take my break even, subtract another 572, and this would be, I'll add this in. So this would be minus 5.72, which would be long, or get my QWERTY keyboard, long put credit. And that would give me an actual break even, ownership break even. And let me find that price. So if I do an actual break even, I've got 58.64 minus 5.72. I'd own the shares at 52.92. And right now we're trading at 51.77. So if I were to do this right now, Frank, I'm only upside down $1.15 on the trade. So what I could do is, what's my break even? 52.92. If I execute this trade right, like I said, and I close out the long put, take my break even, I could go out to my own shares and I could put on a covered call. Let me see what a covered call is at $53. Okay, because my break even would be 52.92. If I did a covered call at $53, I can lower my cost basis again by 28 cents. I get it called away. This gives me a 52.92. So 52.92 minus a covered call at 28 cents gives me a break even of 52.64, get it called away at $53. I can actually turn a negative credit spread into a positive $36 win. So that's $36 on 500 shares. So I'll still make $180 on the trade, never have to realize a loss. So I'm
like half of that.
What's that?
There's just a lot going on there.
I know, but it's easier to walk through this like very slowly. I feel like that's something you want to like handhold people through because that is like a lot of crap to digest. But my point is, a credit spread, it works a couple different ways. One is I'll just take the loss on the credit spread and move on, and I'll lose $1.14. That's it. The other side of that trade is if I'm willing to take the shares, I'm willing to own the shares, then I can turn it into a winner because I can kind of like, in that case, it'd be like adding covered calls is kind of the wheel strategy I can use. So typically a wheel strategy is you do, short puts and then price crosses that level and you get assigned and then you just add covered calls and kind of wheel strategy your way out of the trade for profit. I look at it the same. It's kind of a modified wheel where I do it with credit spreads. So my credit spread is my line in the sand is 60. So right here, this is my line in the sand at 60. Here's my 57.50, but this gets assigned and then this serves as a hedge. So if Oxy continues to fall for whatever reason, okay, if it continues to fall, I can ride this thing all the way down to where I think technically, man, that's a pretty good price to own Oxy. If you ask me, like 44, 43, if I own the shares there, I wouldn't just flip this thing for like, 30, 40 cents a share. I'd try to actually hold this thing and see if it wants to come back into this area and maybe get like $7 or $8 a share. And so I go from making, $180 to then flipping the shares for $4 or $5. Now all of a sudden, let's say I flip it for $5. Well, if I have 500 shares, $5 net credit at 500 shares, I make $2,500, and I never realize the loss on the credit spread. So anyway, that's jive talk, man, for just managing your options trades. That's all it is.
I like Palantir today as well. I
Has
want to buy more of it, but
oh my
it just
gosh,
keeps ripping higher.
I know. Gosh darn it, man. I've been trying to get ratio spreads, and hang on, I don't think this stock is going to stop going up either. I mean, I want to see a pullback.
I think somewhere in the 30s is fine, but
yeah, I'm going to see.
You just don't want to chase it.
I'm not chasing it. I'm just going to set a put out, man. Let's go out. I'm going to go out 60 to 90 days. We've got earnings on the 7th. I'm going to see if I go out through the 15th. That's 63 days out. That'll incorporate earnings on the 7th. Let's see if Palantir at $30. I'll take assignment on Palantir, man. So I'm going to do it.
They got added to the S&P earlier.
I know, and I
think it's today actually. Today was the day they announced it earlier this week. So all these funds got to buy this stock up. I think that's why.
Yeah, there you go. The stock rose over 15% after joining the S&P. Increased price target from 30 to 50. Wow, 50. So I've seen like $44 on my analyst like discounted cash flow model. Hey, Kathy Wood's going to get a win there. The ARK fund sold. They already sold their. Okay, well that means it's going up then because Kathy Wood's a terrible stock picker, or she has a terrible stock manager because they close out at the freaking highs and then buy it, or wait, they close out at the lows and they buy at the highs, pretty much. So anyway,
she's good in a zero interest rate environment.
Sure. Well, I mean, if you're uber disruptive tech, you'd always be good in the zero interest rate environment because there's just cash for days. Okay, here's what I'm going to do on Palantir. I'm going to do a little staggered credit spread. $30 would mean a stock price drop from 35.58 to around. We'd have to drop about 15% on Palantir. What I'm going to do is now. If I add this to the alerts that I have with A1 Trading for my Discord or for A1 Trading Discord in my trade alert section, this is going to be something I want to own the shares. Okay. So this isn't necessarily an income play. But here's a couple ways to do it. I could do here's one way to do it, Frank. I could do a 35 by 34 and collect 45 cents and go a little bit heavy on the contract size and be willing to take the shares if price goes down, right? Because my goal is there's a couple ways I think about this. Can I own Palantir at $30? Okay, and so let me walk through a couple of trades. If I did this right here, okay, and I do a 35 by 34, and I, let's say, do like 3 contracts. Well, I can get 44 cents times 300. I can make a little play there where I'd make about $130 profit. Okay. If price goes up, I make $130 profit. Price goes down, I can use that long put to be my hedge. I can take ownership of the stock and then own it and hopefully add covered calls and kind of wheel my way through it and turn this into a stock that I want to own, lower the cost basis, and then hold it to like a $45 or $50 price target. So there's more upside there. There's that way, which is very cost effective. If I take the shares, then I will take the shares. But let me think about another way. If I just did puts, if I did a 31, 30, and 32. So if Palantir goes up, okay, then I have an income play of $390, and my buying power reduction is about 4K. So let me crunch the numbers on return on capital. So if I put out 39.59, if I go 390 divided by 39.59, I'm looking at about a 10% return on capital and never owning the shares. Choices. I kind of want to own it. Do I want to own 3 contracts at a break even of 31, or do I want to own 3 contracts or 300 shares at maybe $35, and I've got to kind of work my way through an expiration? That's a tough choice, man. Let me think about that, because I want to own shares of. I've been trading this thing, trying to get ownership, and it just hasn't assigned anything. So this is one account. I have a naked put at 20, naked put at 17, naked put at 15, naked put at 13. I've got a ratio spread at the 20 by 19. I mean, I'm trying, but it's now, well above those levels. So I think because I have all this put exposure already, I don't need to put in more naked puts. I'm going to do the credit spread instead. So problem solved. This is what I'm going to do, Frank. I'm going to go sell the 35, buy the 34, and try to get 44 to 45 cents out of this. If I go 36 by 35, now I get 50 cents on it, and I need price to go up about 40 cents to get me paid. Any downside would be me taking ownership. So here's what I'm going to do. I'm going to try to get 50 cents. Let me do 2 contracts. I'll do 2 contracts. That would tie up, if I get assigned, $3,000 or $4,000 of buying power. If I get assigned $3,000 on a cash account, I'll do double that on a margin account. So I'm going to do 2 contracts here, try to get 50 cents profit. Let's take a look at the chart. I'd like to see a pullback. I just don't know if I'm going to get a pullback that gets me anything that I'm interested in. So we pull back into 30s. I'll probably just take the profit and then work my way through it. My destination on this chart would be 45 or higher, as far as looking at where this thing can go. So getting out of the S&P, this adds a whole new flow. Like there's lots of interest now. When you crack the S&P, you typically get just forced order flow like all day long.
Yeah, I'm excited, but I wish I could, put $1 million in the stock if I had it.
Okay, well that's one way to do it.
Yeah, I'm not.
You gonna go roaring kitty on Palantir?
Yeah, I mean, I don't know. I don't know if I'm just like swayed by them, but there's some energy and some moxie about them that you just have to have. Yeah, I mean, Alex Karp, I think he just tells the truth, like he just sounds like he's very trustworthy. Like he'll tell you if things are bad too. Like, I don't know. But I've been following the stock since like 2019 or 2020, and I've owned it.
How long have you participated in Palantir?
I've owned Palantir since like 2020 or 21.
Okay.
And at that point, it was in like the $20 range, and then it went down to $7.
Yep.
I mean, I didn't really have any capital at that time, so I just didn't do anything.
Right.
And then I bought more recently. But yeah, I just think that after all these years, it was priced to be like bankrupt. And then they said they would never have profitable margins. like they're valuable, but they're not as valuable as people think. They'll never make it onto like the S&P or something. And all these things are just proven wrong.
Right.
And it took a while, but I'm just thinking this is kind of the AIP stock. This is going to be the one.
All right. Well, I just put in a trade, I thought, but I'm not seeing it anywhere. That's strange. What is this working order? Ah, there it is. Okay, so working for 50 cents, not filled. All right, let me see if I can get filled at 49 cents. So 49 cents, November 15th. So I'm doing this trade with the intention of owning the shares. So if I put this in the alert section, I do intend to own Palantir. So my trade would be, if I sell the 36, buy the 35, and price goes down, I'm going to use that long put to manage it for profit, and I'm going to lower my cost basis, and I'm going to kind of wheel my way through it to lower my cost basis. So overall, 36 would be the assignment, 35 would be what lets me hedge it, and then I'll add covered calls to lower my cost basis more and hopefully have more upside. So I'm doing this trade with the intention of owning it. So if anybody's following my trade out there with Palantir, I am going to repair a bad credit spread, right? So I do want to own the shares. I'm going to try to take this trade for 49 cents. So let me edit this one here. Let's go replace. Let's go 49 cents. Filled at 49 cents. All right. So I'm going in for, everyone's going to get a piece of Palantir. 9732, good. Okay, and 111. I had a feeling that was going to be on the edge. I mean, the mid's 51, man. Come on. 48. Filled at 48. Okay, and then 9151. All right, and then I'm gonna. So my margin accounts are gonna get 200 shares. My cash accounts, I'm gonna go 100 shares. So I'll take the same trade. So similar, and then a IRA account will just get one contract because I still want to own the shares. So one contract there, and one contract here, and one contract here. Boom shakalaka. Okay, so that trade is in. Let me throw that in. Frank, what do you want to chat about? Let me get this updated in my my section here. This is going to be a stock options trade, adding Palantir.
I'm good for now. I've said
too
all
much.
I wanted to say today.
Okay. Tell me more about tell me more about the guy you respect at Palantir. You seem to have a lot of good things to say about him.
Oh, Alex Karp. I mean, he's a crazy guy, but I feel like he's trustworthy. And I understood why it wasn't at $30 before. So I didn't necessarily want to buy it. And then when they announced their partnership with Microsoft, they're getting more government contracts, which is pretty huge. So they're working government and commercial.
Right.
I just think, I guess the potential for this company is pretty big. Mm-hmm. A lot of forecasts I see are like a $500 billion market cap or something like that in the next few years. And I'm pretty sure it's only like 100 right now. So, I mean, just based on those valuations, I don't know. It seems pretty obvious to me, and I don't want to get distracted by the noise. If it comes down, I'd want to buy it some more. But if it doesn't, might just buy on the way up. But that's just my view on Palantir.
Okay. Price target $45 to $50. So let me throw this in with a screenshot. Let's do a little long position here, 36 by 35. So there. And I'm willing to own this, Frank. I mean, if this thing came down to like $30 or lower, I mean, I'm okay having ownership in here. I would say that if we get below the $20 level, then I'm not as excited about it because I'd be breaking some pretty decent structure. But then upside, I'm going after like a $45 price target. So that's going to be my trade here. So this is an 11.15 expiration, sell 36 put, buy 35 put, 49 cents credit, willing to own shares. So if you just like the credit spread, that's a simple trade for a little income. If you want to own the shares, which I'm trying to own the shares, then that's going to be my trade. So that will be copy, throw that in there, and that's going to get posted here in 5 seconds. Okay. Boom. In for Palantir. Update the spreadsheet. All right. Let me talk about it. I didn't do gold, silver, oil, anything like that. We can chat about that for a second. Currencies, I don't know if you saw earlier in the stream. I mean, the currency market today was pretty crazy. Like Japanese yen is strong. Swiss is starting to fade. Swiss actually had a really weak, like WEAK. It was weak this week. And that's good, but we're getting a little bit of a risk, kind of risk off tone today in currencies.
UJ. That is,
yeah, it's been dropping back to those lows, right?
This is like one of the major indicators, I think, for sentiment. Seeing this continue to unwind.
Agree.
Broke support. If it closes below at this time, that's going to look really bad. I think this week might just be green. Like today might end green. But as far as upside goes, I don't see much of a move past the all-time highs, if that's where it wants to go. So I think, selling calls or doing what you were talking about, a strangle.
Yep.
Just somewhere above price, above all-time highs, I would stay out of the way, but collect premium. I just don't know about this. Nothing about this looks good.
So the dollar yen, I'll just say this. It's obviously, it's flowing a little bit lower. It's taken out this previous August 5th bottom. I am noticing a fair amount of divergence, though. I mean, you see the MACD histogram. You've got the crossover here. You got RSI that's showing bullish divergence. I mean, there are a lot of technical indicators that would show that this stretch is getting a little bit overdone. But it's also that potential interest of like, you've got one central bank, the BOJ, that is, here at 25 basis points and looking to raise. And then you've got every other central bank that's been cutting. And there's going to be more next week. Like if the Fed cuts, 25 or 50, that still brings them down. Bank of England next week. The Swiss is the final week of the month. ECB cut 60 basis points this week. RBA did the RBA cut recently? RBNZ, I think, cut. It's like all these central banks have been cutting. So, let's go cbrates.com. So we have Australia that is still holding at 4.35. Their expectations are going to cut by the end of the year at least 25 basis points. Canada has cut from, I believe, 5% down to 4.25. Eurozone cut 60 basis points. Japan around 0.25, but looking to possibly raise through the next. Who knows? There's no timeline on what Bank Japan is going to do. It's just try not to get burned by the Japanese yen. Switzerland, the Swiss is at 1.25. I would love to see them cut again. And then the US is going to cut and probably keep cutting. The UK possibly going to cut Thursday, the day after the Fed. So, yeah, I mean, it's an interesting like central bank divergence between monetary policy of what one bank's doing to the other. So I was a little shocked. Like even the futures market, man. This futures market is still like just staying up these elevated levels. This has been since 8:30 this morning. This is micro Nasdaq. It's up higher by roughly, 81 points. And we're looking at the dollar yen falling. The DXY is still in what I think is a pretty sensitive zone. So I don't know. This is something I'm going to pay close attention to next week.
Yeah.
So
I think so too.
All right,
But
Palantir.
I'm not excited about where the market is heading.
You're not excited about it?
Not really. If it keeps moving higher, it doesn't make me feel better about its being bullish and whatnot.
Yeah. Look, dude, if it goes higher and your immediate thought is I want to sell it, think about how well that's worked for 80 plus years. Probably not that great. Like the market can melt up and it will make absolutely no sense. And it's clearly not a reflection of the real economy. We saw it in 2020, right? We had, I mean, the COVID crash and the push through 2021 and 2022, it lasted, or I should say the push through 2020 and 2021, it lasted and went way further than people expected. The stretch we've had since 2009 went way further than people expected. We literally, in a 2009 bottom to 2020's flash crash or COVID crash, the only indecision we had was in 2016. Other than that, you essentially had like this uninterrupted bull market for a decade plus. And the expansion cycles last way longer than the downside. And also, I mean, again, like the market can wrap its head around a lot of stuff. I mean, we've had Mag 7 carries through 2022's Q4 into 2023 all year. AI has carried that torch to now broadening out into other things. Look, if tech, which is majority of what the U.S. market is, if tech is going to yield more productivity, higher margins, look, I think the recession is out there, but the data from what we had in 2007, 2008, that was a great financial crisis because every sector, every facet of the economy was hit at the same time. Okay. I think what's weird is post-COVID, everything's been in a different phased recession. Like COVID was services recession. And then we get out and we, normalize and things go, people go back to work and people are back in office or people back in real life and services come back and then manufacturing slows down. And then it's all about tech. It's like, it hasn't been all crap at the same time. And so I think it's fair to argue like we've had a recession since 2020, but it hasn't been all at once where it like sticks. So it's weird. Like we had this rolling recession of like one sectors get affected by it and then it recovers while another sector get affected. Like not everything is happening at the same time. So I don't know. I'm making a case where I can't be just like decisive one side or the other. I would say that I would err on the cautious just because the market likes to do it and just because it can move up irrationally and just because the pain trade is more upside, right? As uncomfortable as you are right now, Frank, for the market to go higher, that's exactly why it can go higher because you think it shouldn't. And you're in the same camp as a lot of other smart people that are like, there's no way this makes any sense. But that's when the market causes the most pain. So I think, like I said, I'm gonna take it on the chin and I'm going to pay for hedges to the downside. And I don't want to, but in the event that we have another August 5th or an August, that type of move, like I don't want to be exposed to something like that. So I'm willing to pay for that crap. But at the same time, if we have more of a melt up, bring it on, dude. Like my portfolio will be freaking great. If we have a melt up towards 6,000, the S&P and the Dow's at all-time highs, the Russell hits all-time highs, I will not complain. So that's believe me, and everybody watching, that is a much easier environment to be existing in and trading in than all of a sudden it's bears and it's bears taking over and it's bearish every day and the volatility index is up. You know how wide credit spreads get? You know how wide the market gets? You know how terrible the fills are? How illiquid it feels? That's not a fun environment. So if you want bearishness, there's a lot of challenges that come with that. So it's nice to be protected, but man, when you go from like, a tight 5-cent bid-ask spread to freaking $2, $3, $4, $5 or $10, $20, that's not a fun trading environment. So I don't know. I'm just saying, like, I don't think we should be wishing for like crazy bearishness because there's a lot. It's like that's the fire exit that everyone ran through on August 5th, and you can see how damaging that was. So I'd like to see the case where it's like, you know what, man, who cares? We don't have to rationalize why the market's going to go higher or go lower. We can, sound super smart. We can talk all sorts of things, but at the end of the day, we're either making money or we're not. So I don't know. I'm just trying to be open-minded. That's all. I can see a case either way because market can certainly stay irrational, and I don't want to fight it. You lose way too much money trying to be, I'm going to be bearish. Well, there's been a lot of bears since 2018 that have been getting smoked. There's been a lot of bears post-COVID that have been getting crushed. So I'm not going to be that trader. But there's my PSA for the day.
I am. But anyways.
I am. All right, good. Well, you stick to your guns, Frank.
Let's call it here.
All right, sounds good, man. Hey, dude, happy Friday. Hey, on a side note, if you want to get together, I am free after this. You want to run through some testing that we talked about yesterday?
Yeah, let's do it.
Okay. All right, everybody. Thanks for watching. Happy Friday. Have a great weekend. We'll see you soon.
Yep. Thank you, guys.
Thanks,
see
bye.
You.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.